If we take a look at the GBP chart on the daily time frame, the first thing we want to focus is on the overall market structure. Since early 2025, GBPUSD has been forming a clearer sequence of higher high and higher lows, which confirms a primary bullish trend. However, in the second half of the year, price begin to slow down and move into a corrective and ranging phase, signaling temporary consolidation rather than a full trend reversal. The key price level we have to pay attention to the 1.3 to 1.31 zone. This area has repeatedly acted as a strong support as shown by multiple rejection candles and strong bullish impulses after price tested this level. On the upside, the 1.36 to 1.37 zone stands out as the major resistance where price have been rejected several times. Currently, price is bouncing from the support area uh, and has started to form a new higher low, which suggested that buying pressure is slowly returning. The most recent candle saw increasing bullish intent, although price has not yet produced a strong and decisive breakout of a resistance. Along as long as price remaining above the latest higher low, the bullish bias remain valid. The idea, the ideal approach is not to chase price but to wait for a pullback into a deep into a demand zone, followed by price action confirmation such as bullish engulfing candles or strong rejection wick. On the other hand, if the price breaks and close below the support zone, the bullish scenario is invalidated and traders should reassess market condition. The key takeaway here is to let the market confirm our bias. In price action trading, patience is a strategy, not a weakness. On the previous analysis, we were working with a bullish continuation scenario. However, the market has now given us new formation. As traders, we must respond, not defend all bias. On this our chart, on this 1 hour chart, price has clearly broken below the previous higher low, and more importantly, it has failed to hold the prior support zone around 1.349 to 1.351. That tells us the short-term structure has shifted from bullish continuation to bearish correction. Notice the area around 1.34. This level was previously a reaction zone and is now being tested again. The way price arrive here is important. Look for strong bearish candle, shallow pullbacks, and no bullish follow through. This is definitely a momentum driven selling, not a random noise. At that moment, at the moment, price is compressing near support, not bouncing strongly. That means buyers are defensive, not in control. This is where beginner often This is where beginner often try to buy cheap professional way to see who actually win this level. Bearish continuation scenario: if price form a lower high on a pullback and show bearish rejection, The bias is still bearish. Short are valid below broken support. Target aligned toward 1.336 to 1.3320. 1.3320, the next demand zone. For bullish rejection scenario, if price show strong rejection at 1.34, you see long lower wick, strong bullish engulfing, and a reclaim of 1.3450. That means counter trend long become a consideration. For our trading plan, too short entry when bearish confirmation on pullback. Stop above the lower high. The target is next our support zones. For long counter trend, entry only after clear rejection and structure shift. We our stop below the rejection low. Our target is the first resistance that have to be managed aggressively. This chart is a perfect lesson. Price action is not about being right, it is about being responsive. When structure breaks, bias changes. When momentum fades, patience returns. Trade what you see, not what you want.